Hello everybody, this is Paul Robinson from FXSimplified.com. If you want to go ahead right now and hit pause so you can read the risk disclosure, do so. Okay, now that we got that out of the way, let's move on to the charts. This video is about the trade of the week. So this is just covering a trade from the previous week, which I have labeled the trade of the week either because it was a monster trade and we made tons and tons of money, or it was just a really great setup, and even possibly I'll show trades that didn't work out just because the overall setup was quite favorable. And after all, this is not a business where you make money on every trade you put on, so it's also important to go over the ones that didn't work out as well. So getting on to the big picture setup in this was, Aussie Kiwi had a hard time getting above this 109 level. As you can see, it was resistance going all the way back to December of 2013. And if we look here, then we've got this head and shoulders pattern, which is pretty clear. Left shoulder head, right shoulder, neckline support. And if you were looking at this pattern with and wanted to determine where you would exit, if you were to take the height of this pattern and subtract it from the neckline. See here, you take this, it's roughly 107.40 up to, we'll call it 109.10. So let's just call it 150 points. So from the point it broke over here on the neckline, you take 150 points and you're looking at, let's see, 107.90, so 106.40 roughly. There's also some support down here at 106.50 and then 106. So this is your zone right here for looking to take profits on this particular pattern. I have orders in above the support level here, just above this zone. But this setup actually was quite unique in that it gave a very low risk trade over here on the right shoulder, and we'll move in on the 4-hour chart so that we can see that a little better. So here's the 4-hour chart. You can see, again, here's the head and shoulders we identified. Over here, what we had was a channel that had formed as the right shoulder, and this doesn't always happen. So you get a shoulder over here, and it'll be a quite it can be a quite sloppy series of ups and downs before actually rolling over and confirming that it is a head and shoulders. So you'll have to wait for the neckline break in order to really put on a trade. But in this case, you were offered a setup within the larger setup. We can dial in here a little bit closer and we'll take a look. So this is a 60-minute, same chart but 60-minute interval, and you can see that you have this nice channel here with this clearly defined trend line. Now, just based on a trade, not even knowing what that big head and shoulders in there, this would be a setup that you could take. This would be something that once it broke this outside this channel, this would be a trade by in of itself. So it's not as if you were just trying to pick the right shoulder. You were actually taking a setup that was valid within its own right. So that's where it becomes special, is that when you get two trade setups inside of one, and it allows you to essentially double up on your position size at the end of the day. In this case, you were able to double up your profit potential while keeping your risk profile as if it was a smaller position. And that's, in this game, it's not always about being right. It's about putting the odds in your favor and being involved in good situations like this where you're able to do so. Where you're able to double up on your position size with, having essentially the same risk as if it was a smaller half-size position. So here's what I did. We broke this channel. I got in at 108.25. I put my initial stop above this swing high here at 108.75. So we had a 50 pips worth of risk. Targets down here in the low to mid 106 area. So you're looking at 175 pips with 50 pips of risk on your initial entry. Those are pretty good odds. You're looking at 3.5 to 1 in terms of reward to risk. So we put on the first position here. When it came down to the neckline, I did cover half just because we could have got a bounce, and it could have eventually became a triangle. That was the other alternative that I had pointed out when I was showing this trade setup earlier last week. And you could have got a triangle here and a possible breakout. So and that's the thing with head and shoulders, they can become triangles. That is something it's not uncommon to happen. So I like to cover at the neckline, and then once it breaks the neckline, you can add back that half that you sold up here, and in addition, you can sell a full another lot on top of it. That way, you've got your first entry, you've taken some profits, and you add back the half, then you add an additional position on top of it. I hope that wasn't confusing and came across clearly. But so anyways, you had this entry, took a little bit of profit, added back to it, doubled up that full position there, then to make it to give you your position that's twice the normal size. So if you never had this set up over here, you would have just waited for this to break the neckline, and then you would have just had on your normal size position, and then put your stop up here above the neckline, and it still you got a good trade going on here, but you weren't able to have a position on it's twice as much. So if your risk reward here, let's say from here to here, and then down to your measured move target, let's say the risk reward was for every dollar you were risking, you were going to make 3. Well, when you put on a trade in this fashion, where you can kind of put on a double execution, where you can get a right shoulder execution and then a neckline execution, you go from having like 3 to 1 to like 6, 7 to 1, depending on where you get filled and whatnot. And it's when you put on trades like that, where you're making 6 and 7 times what you're risking, over time it's difficult to, you can have a lot of losers. You can be wrong a lot, but if you still execute in this manner where you're seeking out double entries and whatnot, you really put the odds in your favor, and that's really what this business is about. So trades like this are very exciting. I look for them. This is there's a couple coming up. If as you read earlier in the newsletter, there's a couple of possibilities out there with the Canadian pairs and the Aussie pairs against I think it's Sterling. Sterling is the one that and the against Aussie, and Sterling against the Canadian dollar are both offering opportunities to get some really nice entries. EuroCAD as well. So they may or may not happen. But it's good to have a plan of attack in case things do play out that way. You don't want to go into the game without a game plan, right? So anyways, so we've got our first entry, took off half, put it back on, doubled up, and now we're waiting for the target down here, and I'm still sitting right now. It's trading at 106.89. It's about 10:30 Eastern Standard Time. I would hope that at some point in the next 1.5, 2 days tops, we would get down here to this 106.50 area. I mean, it's possible we get a bounce up here, and then we'll end up having to sit around a little bit before it gets down here. But this would be a good spot to cover. We'll have hit our target. We'll have made some pretty good money on this. So this was an exciting setup. I hope that this has been informative, and thank you for joining me, and I'll see you guys next week. Bye.